Welcome to the series we call From Bookkeeper to CFO Advisor. In this course, we're going to be talking about the mindset shift for freelance accountants. And this is a big one. In this first module, we're going to talk about the shift from being a recorder and categorizer of transactions into an advisor. My name is Joe DiChara. I am a CPA for over 4 decades now, and in that time, I've had a chance to work literally with thousands of small business owners. And I've seen technology go from when I first started, when I used a lead pencil and a calculator, an adding machine, which was the technology, the adding machine, and to go from that to where we are today. And let me tell you, folks, this is probably the greatest opportunity for bookkeepers and accountants all over the world to make that shift from being the transaction person to being the strategic partner. So let's get into the course right now. The first thing is to talk about the trap, how bookkeepers and accountants get stuck into a situation where we're almost trapped. We hit a ceiling. We're trading time for money. And let me explain what I mean by this. It's a hidden trap. When you get stuck in the data entry mode, you're viewed as a technician, almost as a commodity. In a client's mind, we're looked we're looked at as a low value task. Yeah, we are needed. Bookkeeping and accounting is needed. It's necessary because every small business owner realizes that at the end of the day or at the end of the year, they're going to need a tax return done. And without a good set of financial reports, preparing a tax return is basically impossible. So it's almost like accountants and bookkeepers are viewed as a necessary evil. Now, if you're experienced enough and can communicate enough to the business owner, you've provided value in the way of helping them create their accounting systems, minimize their taxes, and hopefully even do some tax planning and projections. But as far as being a strategic partner, that very rarely happens for us until now. And I'd like to explain to you in this slideshow how that happens. But first, let me point out that these slideshows, all of the slideshows in the course are important, but they're not even close to being the entire course. If you want to get the most out of all of our courses, what you need to do is pay attention to the slideshows, maybe view them multiple times like I usually do, but you need to get into the modules. You need to get into the content. You need to get into all the bonuses and the resources that I provided for you in the classroom. You also have the opportunity to reach out to me and other community members for guidance and support. So this isn't just, watch the slideshow and you're going to magically transform into becoming a CFO. It doesn't work like that. It takes time, it takes work, and it takes belief. If you believe that you can transform yourself, you can. And look at it this way, everybody starts at the same place. We all start from zero. We all start with no experience, no knowledge, and eventually one day you look back and you say, "Oh, look at where I am now. I never thought it was would be possible." We do it a little at a time. Now, if you've spent the time and effort to become a bookkeeper, an accountant, a tax preparer, I guarantee you that you already have the talent, knowledge, and experience to turn yourself into a CFO. But let's get back into the slideshow. Why do clients pay less for bookkeepers and accountants? Well, you don't get paid for what you do. You get paid for what I call your perceived value. And that perceived value, and I say perceived because even though we could be solving the client's biggest obstacle, their biggest problem, if they don't see it that way, it's not going to be valuable to them. I'll give you an example. I've gone into plenty of small businesses, helped them design an accounting system because you can't have clean financial reports and therefore clean, accurate tax returns if you don't have a good system. Most people don't have the ability, the knowledge, and the skill needed to go from point A to point B with their accounting. They don't have the ability to go from uh, the transaction to a tax return. So that takes processes. Well, most small business owners just look at that as, oh, that's what you do. That's accounting. They don't realize how important that accounting system is. So, what value do they put on it? They put almost no value on it. Yeah, at the end of the day, they're going to say, "Thank you for preparing my tax return." But now, if you go to them, if you become a CFO, and we're going to go through their biggest perceived problems, and you explain to them this is why they have no cash in the bank, but not only that, you're not only going to explain why they have no cash in the bank, you're going to tell them if you do this, this, and this, you're going to have plenty of cash in the bank. Well, you just solved their biggest problem. No business can run without cash. So, is it a problem? Yeah. But believe it or not, you can't get to that unless you have the accounting system. And the real problem is business owners have no idea about what accounting is, how it's done. If they did, they wouldn't need us. And therein lies the problem. It's the perceived value. All of it is valuable, from entering the transactions to recording the accounts to categorizing everything to overseeing the financials, making the year end, adjusting entries, adjusting for interest, depreciation, putting it on a tax return. That's all important. But what business owners want to see is, hey, I have this problem. How are you going to help me fix it? Without that, we become a commodity. What's a commodity? A commodity is something like gas. You're not married to any particular gas brand. If you need regular or premium, there's standards that, okay, if it's regular, it can't be watered down. If it's watered down, it's going to destroy your car. So you basically know that regular gas is going to be the same at all the different gas stations. So where do you go? You go where the price is the cheapest. We're not commodities. Some business owners, a lot of business owners look at bookkeepers and accountants as commodities. So they try to find the least expensive, more knowledgeable business owners look for something more. They don't look at accountants and bookkeepers as commodities. They look at us as vital parts of their business. But we're still not strategic partners. We're still not strategic partners. Okay. We're looking at what already happened. We're looking at history. Business owners, the only thing business owners care about is today. How much cash do I have? Do I have enough revenue to pay all my bills? See, for us accountants, the past is important. It tells a story, but it's a story that already happened. It's history. Business owners aren't concerned with history, at least not the knowledgeable ones. Or did I say that right? The very experienced, knowledgeable entrepreneurs know that all of this is important. They know the value of an account. But those entrepreneurs, unfortunately, are few and far between. Like I said, I've worked with thousands of them. So I pretty much have a good understanding of their mindset. Okay. Last but not least, what you're looking at is being task oriented as opposed to strategic oriented. Next slide. So here's the mindset difference. Like I said in the beginning, if you've been doing this for a while, like I have, you already have the skills, you already have the knowledge. What you might be lacking is the mindset, the idea that, hey, I could be doing something more for this client. I could be crunching the numbers and projecting and doing budgets and cash flow analysis. I can be doing variances and explain to him, hey, your sales went up, but you have less cash. Why is that? Something's happening in between. You have the knowledge, you have the experience. And by the time this course is over, I'm going to show you how you can do that. And in parts 2 and 3, I'm going to give you the nuts and bolts of everything else to become a CFO. This is lesson 2. So in this is module 1. We have 4 different lessons. Each slideshow is a module, and I've combined all the different lessons in there. And there's not a lot of slides, to be honest with you. Like I said, the work is in the content. The work is in the content. This is just an overview. So what does an accountant do? Accuracy, cleanup, compliance, reporting, all important. What a CFO does is the CFO takes it to the next stratosphere. A CFO is going to be advising their client about cash. I always use this example. Decades ago, Apple Computer was on the verge of bankruptcy, one of the most valuable companies in the world. Their CFO said that they were going to run out of cash in 90 days, not about 3 or 4 months, not sometime in the future, 90 days. And that always amazed me because Apple Computer was doing billions and billions of dollars of sales all over the world. They had thousands of employees. And I thought about that. I said, if a company that size could pinpoint the day they're going to run out of cash, we should be able to do that for small businesses. We should be able to do that for any size business. Now, Apple Computer can afford the world's best, the world's most experienced financial people, small businesses. And let me be clear here. When I'm talking about small businesses, I'm even talking about the solopreneur because self-employed businesses, one person owners make up a majority of the US businesses out there. Today, April 2026, there's over 33 million small businesses out there, or 33 million US based businesses. A very, very small percentage of them are large businesses. And when I say large, I mean businesses with 1,000 or more employees. Believe it or not, almost 90% of those 33 million are single owner businesses, either sole proprietors or corporations that have one owner and zero employees. If they're incorporated, they have an employee. It's only them, the owner. For a business to go from zero or one employee to two employees is rare. It's rare, believe it or not. So why am I saying this? Because in today's world, even a single owner entity needs a CFO. They need a CFO. And for the industry as a whole, the CFO world is going to explode. It's going to explode because of technology, because of AI, the whole entering transactions, categorizing, reconciling. That's going to be left to the AIs. That doesn't mean that AI is going to replace us. What it means is what it meant all the other times that I've seen technology enter into the picture. When desktop computers first came on the scene, accountants were aghast. They were, oh my God, the computer, people are going to use computers now to add up numbers. They're not going to need us. Well, lo and behold, what desktop computers did was create more opportunities. The computer didn't replace anybody. What the computers did was make it better, enable accountants to do more work, more important work. When QuickBooks came on the scene in the early 90s, again, accountants said, oh my God, QuickBooks is going to replace us. They're not going to need somebody to do their bookkeeping. Well, lo and behold, here we are over 40 years later. And did QuickBooks replace any bookkeepers or accountants? I'm asking you, do you think that QuickBooks, a software program, replaced us because the owner was able to do their own bookkeeping? I have never met one business owner that could do their own bookkeeping. That was a big lie that Intuit perpetrated on the world. You could save money by doing your own bookkeeping. It's the same thing now with AI. AI isn't going to replace any accountants. If anything, it's going to give us more opportunities. Not only that, AI is going to enable more people to open businesses, more opportunities. So you can mark my words and come back to me 5 or 10 years from now. What else does a CFO besides just, projecting cash, which in the owner's eyes is probably the most important thing that they can do. But what a CFO really does is it helps the owner make informed decisions, forecasting, profitability, direction, what if scenarios. What if we got better terms from our vendors? What if we got clients to pay us faster? Or the opposite. What if there were disruptions in the supply chain? Hello, COVID. Okay, people, started understanding what supply chain meant when the supply chain was broken. So this is how your value increases when you become a CFO. The accountant's valuable, no doubt about it. I've been an accountant for most of my life. Nobody's going to tell me that I haven't been valuable to my clients. And I believe that my clients look at me as being valuable. Clients look at bookkeepers as being valuable. But when you go from being the transaction recorder and the historian to being the CFO statistician, in other words, the CFO strategic partner, the individual that the business owner is going to go to when they actually have to make a decision, before they make a decision, the value goes up. It's like all of a sudden the value of an accountant goes on steroids. That former accountant turned CFO goes from Clark Kent to Superman. And that's the truth. Now let's get into their mindset. Let me put you in the shoes of the business owner. What do they care about? They care about four main questions. Now remember this, because if you could master answering these questions, you'll be successful as a CFO. This is what they want to know. Where is my money going? I'm busting my butt. I'm putting in 23-hour days. I'm getting more clients. I got more revenue than ever, but I got less money. Where is it going? Number two, am I going to have enough cash, let's say, to make payroll? Not only today, but 3 months from now. Imagine you do a cash flow projection and it shows that in 90 days you're going to be broke. You think you're going to have the owner's attention? And then his next question is why? What can I do? What can I change? How do I make that not happen? How do I make it so in 90 days, instead of being broke, we have twice as much more cash than we ever had before. And number four, what happens next? There's always the next. Business is a moving target. It's not static. Every time there's a transaction, those financial numbers change. When you do a budget, you're going to compare it to the actual, and then you're going to see a variance. What you want to do is be able to explain what the variance is, why it happened, and what it means going forward. It's not enough just to give them the numbers anymore. Most people, including business owners, don't like numbers. Most people that like numbers become things like accountants, actuaries. Okay. And the truth is, the majority of people don't only not like numbers, they're afraid of them. They're afraid of them. So think about how valuable you can be if you could not only explain the numbers, but explain why this is happening and what they can do to change it. Where is my money going? Like I said, I got ahead of myself. I get really excited when I get into these lessons. But they want to know where their money's going. Put yourself in their shoes. Okay. Imagine you're running a business. Imagine you got 25 employees. Things look like they're going good. Sales are through the roof. You don't have enough people. You got to hire more people. And then you look at your bank account and you're getting hit with overdraft fees. I have a client that happened to. She was just on my podcast. She has a call center. At the time, she had over 1,000 employees, and she had a CFO. He wasn't really a CFO. He was an accountant, but he came to her and he said, "Oh, we're going to have a problem making payroll this week." And she wasn't informed. She trusted him. She thought, he had her back. He didn't, because what was he? He was really the historian. She didn't need a historian. She needs somebody that would have told her, hey, in 90 days, you're not going to be able to make payroll. So she learned the hard way. Today, she has over 1,600 employees. She learned that she needed a CFO. She learned how to understand the numbers, and that made all the difference. Otherwise, she would have been out of business. Will I have enough cash? Am I going to be able to make payroll in 90 days? These are the things that business owners worry about. These are the things that they lose sleep over. What should I change and what happens next? You can't just say, oh, if get better terms from your vendors, you're going to be okay. What you want to do is you want to be able to give them what if scenarios. Hey, if we went from 30 days net to 90 days net, that's going to free up a lot of cash. That's going to have that's going to give you a chance to get paid from your customers and then pay your suppliers. That makes sense. If we don't get terms, what else can we do? Well, maybe we could speed up collections. There's a lot of things we can do. If you're in an inventory sensitive business, hey, what's not moving? What's sitting on the shelves? Let's get it out of here. We need to turn this stuff over. This is what they're looking at. Your new role, and this is what I'm talking about. Stop being the historian. Business owners don't need or want historians anymore. At one point, When I started in accounting, accountants were called the trusted advisors. I haven't heard that term in decades because before all this technology, before the world was turned on its side, what we did was we had to actually meet with the client every month or every quarter. There was no way around it. You had to travel to the client because that's where all the information was. At the end of the day, you crunched the numbers, you met with the client, and you talked to them. Since computers, since QuickBooks, accountants got lazy. They started taking shortcuts. They stopped talking to their clients. It amazes me how many tax preparers there are out there that just do tax returns. They never meet with their clients, they never do any planning. Those are data entry clerks, they're not tax professionals. So get out of that data entry mode, get out of the transactional business, get into the advisory role because going forward, that's what people are going to be looking for. Review the old row. You're a historian. You reconcile transactions. Business owners don't care about that. Monthly reports. To be honest with you, we do quarterly reports for every client. I don't think one of them even looks at it. We encourage them to meet with us. Some of them do. Okay. We're talking about a whole mindset shift here, not only on our parts, but on the business owners' parts. You see, a lot of this stuff that we're going to start doing for them, they don't even know exist. They don't know it exists because as their accountants, we haven't presented it to them. And to be honest with you, to do a 13-month budget and a cash flow forecast took a lot of time and effort. And time cost money. Clients weren't going to be willing to pay for that if they saw no benefit in it. Well, now at Bedrock, what we're going to start doing is using all of these AI tools that I'm going to introduce to you. We're going to be giving them the budgets, the cash flow forecast until they see the benefit of it. Once they see the benefit of it, then we can start charging them for it, if that makes sense. Your new role is as the strategist. Instead of monthly reporting, it's going to be monthly decisions, decision based work, future focused. Let me say that again, future focused. Okay, we're looking into the future for them. Now, I have a short mini exercise. Now, what I suggest is you take an existing client, assuming you have one, uh, look at that client, describe what you do for them, and chances are you're going to say, well, I enter their transactions, I reconcile, I produce the financial reports. Some of you may be meeting with your client to explain that. And then what I want you to do is answer those four questions. Where is my cash going? What's going to happen? What can I do? Those four questions that I posed to you. Why is this important? Because it's going to bring everything that I just told you into play. Number one, you're going to realize why you might be getting stuck. Think about this. Even if you're making a good amount per hour, Maybe you're making more than you ever thought you would make. Number one, you're still limited. You're limited by the amount of hours you can work. Number two, that kind of work is going to start dwindling. If you're entering transactions, people are going to need you to enter transactions. For decades now, the accounting software has been using bank feeds. So a lot of you aren't even entering transactions anymore. You're just taking the bank transactions, you're making sure it's categorized and reconciling. Okay. Even that stuff, that's going to be a thing of the past. And I know you might be thinking, well, the software you can do like with QuickBooks, you can do rules, and every time that transaction comes in, it goes into the right category. Well, let me ask you something. In your experience, has that ever really worked? Have all the transactions come in categorized correctly? I think not. Well, AI is going to make that a lot different. It's going to make it a lot easier to categorize these transactions. So if you're in the transaction entering mode, that amount of work is going to start dwindling. So unless you start changing your mindset now, you're going to have a lot less to do. You're going to need a lot more clients to make the same amount of money. If you change your mindset and become the CFO advisor, you're not gonna have enough time to add new clients. You're gonna be spending a lot more time doing stuff for your client that you never did before, more valuable stuff. Okay. Think about what I showed you, the difference between what an accountant does and what a CFO does. Get yourself into the mind of your client. What do they really need me to do? About 15 years ago, one of my mentors said two words that changed my whole perspective of what my role was. And the two words were serve first. Serve first. See, before that, I was in the accountant mode. I was looking at my hourly billing. I was looking at, hey, this client is high maintenance and I'm only getting this amount of money. Either they got to go or I got to raise my fee. When I came home from that mastermind trip, I said, you know what? Let me try what Larry advised. I looked at my clients and I looked at what they needed and I just started providing it. And lo and behold, before the year was over, my revenue had gone up by over 60%. Think about it. Because I shifted my mindset. I went from being the accountant, the historian, to the strategic advisor. Without even realizing it, I became the CFO. I started looking ahead. I remember I had one trucking client that had a bunch of trucks. They had about 10 trucks that were all on individual leases. When I looked at the leases, I calculated what the interest was that they were paying, and it was astronomical. They never asked me to do this, but what I suggested to them was, hey, let's consolidate all of this into a a term loan. We go to one lender that's going to give us better terms. And what it did was it reduced their monthly payments dramatically. It lowered their interest expense. And a few months later, on Long Island, where we were, we got hit with a major, major tornado, floods everywhere. Now they were delivering gas. Now For about a month, there was no gas deliveries, there was no driving. Everything was flooded. We were in survival mode. And I think back at that time and I said, if I hadn't suggested this, they could have never made those lease payments. They would have been looking at bankruptcy. So that kind of forward thinking, that change in my mindset had direct influence over what my clients' results were. They were able to make informed decisions because I turned myself from the historian accountant into the forward thinking CFO. And I've done it for all of my clients since then. So if I could do it, I'm sure that you can do it. All it takes is a simple mind shift. Like I said, all it took for me was two words: serve first. See, money is a result. Success is a result of what you've done before. If you keep doing the same thing, you're going to keep getting the same results. So, like I said, mark my words. I've seen this happen before. The change in technology, all the naysayers out there are saying how this is going to, AI is going to be replacing people. You're going to have mass unemployment. I think it's going to be the opposite. And the people that are forward thinkers, the people that embrace this technology and shift their mindset, are going to be more successful than they ever dreamed possible. You're stepping into a new role. That's what I'm suggesting here. Step into a new role, step into the future, step into success. That's my story. I'm sticking with it. Thank you. I invite you to book a chat with me if you want to talk about your career, if you have a business, if you have a client that has a business that needs some direction, like I'm talking about. All you got to do is go to timewithjoe.com and I'd be happy to work with you. All right, over and out. God bless, and I'll see you in module two. Thank you.